joining after lunch, after that awesome soup we had there. Well, my name is Rohit, and I represent ToroAlerts. And we're going to talk about how automated investment can strive for higher returns and capital preservation. Now, Nick Murray, everybody knows about him. He believed in not trying to time the market. It is stupid to time the market, according to him. While there are other leaders who believe that timing the market is important because anybody can be a genius in a bull market. So why not time the market if you're really smart in that? So basically there are two types of investors. One are the investment advisors or investors, and the other ones are traders or self-managed people. Now, one believes that you should never time the market, while the other believes timing the market is very important. And the difference is that they believe that you shouldn't time the market because it's very emotionally exhausting. And most of the time, 99% of the time, people cannot time the market. While traders and self-managed people, they want to get in and out of the market because there have been situations like now and 2000, 2001, 2008, where the market crashes and the 401k IRA account just gets wiped out of that. And sometimes they believe that the market is overpriced and it is not really important to stay in the market at that point. But what we believe, there is a middle ground, and the middle ground is the automated investment. And the automated investment is relevant in our perspective because the number one reason is that we believe that capital preservation is the most important aspect in risk management. And automated investments, all the folks who believe that we shouldn't be timing the market because of emotional exhausting, it takes away the emotional exhausting aspect out of that. Now, we are a FinTech company who basically serves and verifies investment strategies, and we provide a platform. It's called So Intelligent Platform, which is an aspect of social intelligence and artificial intelligence. And what we offer is social intelligence integrated with the machine learning and an aspect of automated training. And that's what we offer as a platform, as a product. We basically essentially are a watchdog of your portfolio for using artificial intelligence and social intelligence with a bunch of different data tools. We want to cater different kinds of people or different kinds of traders and investors. Some who like the thrill of investing, so for them we have alerts. They can get alerts and trade however they want it. Some people like to build strategies and they want their strategies to be run automatically, and then we offer that as well. And some people who just want to be influencers, who want to design strategies and people can take advantage of that. And we want to cater our product. Our product is catered to all the different types of aspects of that. Currently, we have a mobile app where you can build a portfolio and you can build strategies around that, and our AI system will alert the buy and sell signals. Or you can also pick and choose strategies where different people have planned and decided. And you can get alerts of that. And you can also search mutual funds and get bull and bear rating if you're an investment advisor. We also have a crypto app which tracks about 200 cryptos and does similar things. The social aspect is the marketplace, and our automated tool is the auto executor. Now, typically, most of the people have their portfolios distributed between stocks, bonds, and some of them have real estate in there. 40-60 is typically the ratio which they use, and if we have real estate, then it's going to be 40-30-20, right? I mean, it's pretty typical. Now, in the last 93 years, if we analyze the last data for 93 years, and if you had 100% investment into stocks, you would have had annualized return about 10%. And if you would have just purely bonds, then you would have annualized return about nearly 5%, right? And that's probably typical. That's why, let's go 60-40 and get somewhere about 8% annualized return, right? Pretty typical. Now, it worked during the market downturn of 2008, 2009, 2000, because when the stocks are not doing good, the bonds are taking off, and like most of the long-term bonds and mid-term bonds, they were doing amazing, right? And during that time, a lot of companies filed bankruptcy, so it makes sense during that time. A lot of money was wiped out of the stock market, right? But currently, the situation is different. And we at ToroAlerts believe that every situation is different. It's not like every time we'll have an idea about what the situation is going to be, right? In the current situation, the stocks are going down as well as the bonds are going down because the Fed wants to raise the rates so that they can reduce inflation while the stock market is doing bad because of war, because of economy downturn and different kind of reasons, right? So at this point where we are, like S&P 500 has lost 15% since the year. I mean, in the last couple of days, this data is still pretty older. And TLT, the long-term bonds has lost, and mid-term bonds have lost money as well. So they have about $7.6 trillion have lost in this market, which is a lot more than the last different financial crisis which we had. So the situation we are in right now is there is no place to hide. There is no, we cannot hide behind bonds, we cannot hide behind stocks, and even some people thought that we can hide over crypto. We can't even do that either. No, and that is why we at ToroAlerts, we believe that cash is king. And cash is the best way to preserve capital during these market downturns. Now we also believe that, getting in and out of the market is difficult, right? You can be in cash during market downturn only if you know that there's going to be a market downturn. And that is why being in and out is extremely difficult. And switching between cash and investment is only possible if there is a bona fide intelligence and there is an automated way of doing it. Because at the end, it comes to becoming emotional, like, no, I don't think so. I think still the market is going to be on the upside. And that is why we believe that automated investment is the best option during these market downturns, because we don't know what the next financial crisis is going to look like. Now, this is just an analysis from our data, what our AI aspect does that. And we did an analysis of the top 25 most traded stocks in the stock market. And these are just purely stocks, these are not indexes. And 19 out of 25 performed pretty well based on the buy and sell strategies which we had. Now, if you would have had just a buy and hold, you would have about 0.38% return, or less than a percent return since January 2021, when the market was really going crazy as well. But if you would have an AI system, and specifically in our situation, a ToroAlerts AI system where it can mitigate risk, where it can automatically get in and out, we would have about 24% returns, and with equal distribution in all the given stocks. Now the main strategy which we use in doing this is capital preservation. When the AI or intelligence thinks that the market is in a downturn, and riding the market, riding the bull during the bull market situation. And that is our core value proposition as well in our product. So in our product, you can go and build a strategy, you can build a list of portfolio of stocks, what you want to do, take smaller losses, have bigger gains, and that's what we are offering as a product, and that's what we believe that during market downturn conditions, in order to best way to do capital preservation is staying cash during market downturns. Thank you so much.